What's going on, everybody? Hope everyone is having a great week. We are looking at March 21st, 2026. It's a Saturday. And it has been a busy week for me, for the rest of the Sent Me team. But at the end of the day, I want to always make sure that a lot of what we do here at Sent Me is break down freedom literacy concepts for you to be able to navigate more and more. For those that may be new to the channel, my name is Jordan Perry. I'm the founder and CEO of Sent Me, and what we do is make complex simple, a lot through analogies and other mediums, but we really are focused on helping people understand how they can navigate the financial world and essentially make better and smarter decisions as it pertains to managing their money. So what we like to do is, go live. I go live a lot on Instagram. I also share a lot of content on social media, but I think it's also important to put out long form videos that allow individuals to be able to learn more about these key topics, especially in this environment that we're living in right now. As you look around you, the cost of everything is going up. And I believe that right now is a very critical time where individuals that may not even take their finances seriously should consider it. You should take your finances seriously regardless, but considering the environment that we're living in, the economy, etc., you definitely want to make sure that you're taking this stuff seriously and that you're applying lessons. So with Sent Me and what we share, I'm very focused with my team on sharing information that allows you to take actionable steps to better yourself. So what I really want to get to today is talking about the concept of why the denominator matters. And before I get going, if you look right here, we have some t-shirts on our website. We have some really cool merch, long sleeve and also short sleeve shirts that say the denominator matters with our Sent Me logo on it. And also, when you see it, you can't unsee it. Over the course of this video, you will learn more and more as to why the denominator matters, and you'll also learn why we decided to put that message on merchandise, to share it with you, to share it with the world. A lot of individuals have been buying the merchandise and rocking it. Shout outs to you guys. And we got a lot more in the works in terms of different ideas and how we want to grow that message and communicate that in different mediums to individuals across the globe. So in terms of what the denominator matters means, I like to go back to fractions. I'm sure maybe when you were in elementary school, you did fractions, you did math class. And if you remember fractions, you have the numerator and you have the denominator. Numerator, you have the line, you have the denominator. Now, when we talk about net worth as it pertains to how much money an individual has in their bank account, maybe you have $10,000, maybe you have $50,000, maybe you have $100,000 in investments, right? That's your personal numerator. Now, the denominator of dollars that exists in the financial system is based on how much debt and how many dollars are circulating in the economy. Now, right now, pretty much as of a few days ago, the United States debt hit $39 trillion, which is a record high. Now, think about this way. If you have $100,000 in your bank account and you go to work and you may invest in certain stocks, you may invest in bonds, you may invest in real estate, whatever it may be, and you value those assets, the denominator is 39 trillion. And that denominator of dollars that exists in circulation in the economy, in the whole world economy of dollars circulating, is always increasing. In the past 8 months alone, the debt, the denominator, has grown to 39 trillion. It was up like $2 trillion in 8 months. And as a result, it's not slowing down. Now, to the average individual, you may be thinking, well, what does this have to do with me? Like, that debt is the US debt. What does that have to do with me? It has everything to do with you. Because the reason being is your future, your children, your grandchildren are going to bear the brunt of the debt levels that are constantly being increasing in the whole monetary financial system. It's constantly happening. We live in a debt-based system. You get a credit card, debt. You get student loans, debt. You want to get a mortgage, debt. All of this debt, consumer debt, credit debt, student loan debt, car debt, is all feeding up into the trillions and trillions of dollars of debt that are essentially existing in the economy. in the whole world economy. Now, you may look at your own individual situation and say, well, for me, I may not have as many student loans, but I have $100,000 in my 401k. But here's the kicker. No matter how much you have, you're always going to have to understand that the denominator of dollars in the system matters, and it does impact you because you have something called monetary inflation. Now, monetary inflation is essentially the flow of dollars that exist in the economy. I'm not even going to go into, in depth super much on how that kind of factors into it. But if you think about different situations like COVID, which was most recent, that was a situation where a lot of capital and dollars were infused into the economy to stimulate the economy. 2008 was a huge time when stimulus and rates were essentially low, interest rates. And as a result, money, dollars, paper was pumped into the system. It was pumped into the system at record amounts. And in COVID, that was a huge record amount in terms of how much dollars were circulating in the economy. Now, as a result, 5 years later, or 6 years later, from COVID, people are feeling the brunt of that monetary inflation. Your dollars that you have, your numerator is buying you less. And this is why we put that message on the shirt and we say the denominator matters. The denominator matters. At the end of the day, no matter how big your numerator gets, you have to understand that the denominator of dollars that exists is debasing your value, your time, and your energy. I'll repeat that. As dollars are pumped into the economy through war, through bailouts, through stimulus, whatever it is, these things cost money and you're paying for it. You're paying for it. And anytime dollars are infused into the economy, your dollars that you earn at work are buying less. This is why owning assets is so important. It's not even optional at this point anymore. It's really not optional. It was never really optional, but at this point, in this juncture right now, on March 21st, 2026, you have to own assets. And that's why the denominator matters. Now, to take it a step further, think about everything around you, right? Think about the idea of the NFL. There's a certain amount of NFL and NBA teams, etc., that exist. The individuals that are wealthy enough to own an NFL or an NBA team, they're in a very elite circle. Now, if you think about that, when's the last time you would have saw a new NFL team arise or a new NBA team be launched? It doesn't happen often. The denominator of NFL and NBA teams is relatively fixed. Let me repeat that. The denominator in the amount of NFL and NBA teams that exist is fixed. That's not by accident. That's on purpose. That's on purpose. The idea is that the individuals that are in the close circle that are able to have access to buy an NFL team or NBA team don't want a bunch of people to be able to go launch and buy an NBA and NFL team, because that would devalue the value of their team that they own within that close circle and ecosystem. It would debase the value of the league if everybody could start an NFL or NBA team. The same concept applies to scarce assets, and also when I say the denominator matters. People work for dollars and we work for currency. In the Federal Reserve and the government, they're able to infuse and print dollars at will. This isn't like some coincidence. This is by design. This is why the individuals that own the most assets, as money is infused into the economy and inflation eats away people's time and energy and robs them and robs their grandchildren and their children and their future children that aren't even born right now, the individuals that own the assets, the wealth gap widens. It widens. It gets wider and wider and wider. Now, when you think about hard assets, things that can't be printed or debased, that is key. Now, I'm a big proponent of hard money, sound money. I literally talk about this all the time on my social media platforms via SentMe, and I share blogs and newsletters about this. And this is becoming more and more prevalent right now. The issue is a lot of people don't understand a world in which dollars are the only dominant thing, right? We get paid in dollars, so you're like, well, if I get paid in dollars, all I need to hold are dollars. That could be your opinion. However, when you think about hard money and hard assets, it starts to unlock a different aspect of your mental and your psyche to understand that this is truly why the denominator matters. Now let me explain. If I gave you a gold coin in 1971 and literally I gave you another gold coin in 2026, that one gold coin is still the same gold coin. Let me repeat that. If somebody was to give you a gold coin, if I gave you a gold coin in 1971 and then I gave you a gold coin in 2026, that gold coin is the same gold coin. The reason being is because gold is money, right? Gold is a money. It's a hard money that can't be printed or debased. The difference is the value of that gold, the amount of things that you can buy with one gold coin, has increased exponentially. 1 ounce of gold in 1971, I think, was about $33. In 1971, 1 ounce of gold was $33. Now, as of, I'll look at it right now. I'm going to pull it up right now for you guys. What is the price? What is gold's price? March 21st, 2026, today, on this lovely Saturday, the price of gold is, drum roll please, pulling it up, $4,507 for 1 ounce of gold. Nothing changed about the ounce of gold from 1971 until 2026. It's the same ounce of gold. The reason being is because gold is a money and everything else around us is credit. It's all debt. The dollars are backed by nothing but a promise. It's paper backed by a promise. And they print more paper to mask over the promises. 1 ounce of gold in 1971 is the same ounce of gold in 2026. It just allows you to buy more things. The denominator of gold that exists in the world does not increase at the rate of dollars. Dollars are printed every single second of every single day in a debt-based system. But gold, which is a hard money, can't be printed. Silver, which is a precious metal, it can't be printed. Bitcoin, which is a hard money, it can't be printed. It takes proof of work. It takes time. It takes energy. A lot of individuals don't really think about that concept. If I gave you 1 Bitcoin today, it'll be the same Bitcoin 5 years from now. The only difference is the dollar denominated price of that Bitcoin may change. The other key aspect when it comes to Bitcoin is that there's only 21 million Bitcoin that will ever exist and ever be mined. But as the price of gold becomes more valuable or higher, individuals may try to go mine for gold. There's individuals that have done space exploration. They have asteroids and they believe that inside these asteroids there's gold. But Bitcoin is algorithmically programmed to only have 21 million Bitcoin. Now, not even to go down the rabbit hole of Bitcoin and gold and silver and give anybody this whole explanation as to, the background story and all of that. But the key that I'm explaining here is that the denominator matters. People only think of the dollar denominated price of hard money, and they allow their greed or misunderstanding of how paper currency is not the same as hard money blind them from the opportunities that are available around them. We know for a fact that the price of everything is going to constantly go up forever because your dollars are going to constantly buy less. Let me repeat that. The cost of everything around you is going to constantly go up, and your dollars are going to always buy less. And as a result, you have to understand and study the history of money. You don't have to have everything figured out as it pertains to financial literacy and just finance, but you need to understand from my video that I'm explaining to you right now is that the denominator matters. Nominal value, which is the number of dollars that I have in my bank account, is completely different than the purchasing power and the real value of the dollars that I can take into the economy and then go buy an item with. For example, literally, if you were to have $100 in 2020, your $100 does not buy you $100 worth of goods in 2026. I actually just did the math the other day, and literally $126 buys you what $100 used to buy you in 2020. That means your dollars have lost like 26% of its buying power in literally a short period of time. And on top of that, there's price inflation. So you have monetary inflation, so dollar debasement, and you have also price inflation because the cost of everything else is being passed over to you. All of the inputs, whether it's the individual that is going to get eggs, you think I'm just going to pay money for these eggs at the supermarket, but there's an input cost. It costs the store money to stock the eggs. Whoever is farming and making the eggs, they had to sell those eggs to a distributor, and they had to drive and use gas to drive and drop those eggs off at the supermarket. So there's costs that are passed along to the end consumer. But most people, when they talk about inflation, they're only talking about it as it pertains to cost inflation, but they don't understand monetary debasement. Debasement meaning how your dollars buy less because of the dollars that circulate within the economy. And as a result, dollars will always be printed as long as we live in a debt-based system. This is the reason why it's important for you to understand that the denominator matters. This is another reason why we put this on the shirt. And we put it on our long sleeves too. The denominator matters. Literally. And when you see it, you can't unsee it. I know for me, it's been an interesting journey. You know, like my background's in finance. I studied finance undergrad. I went to business school, and I'm thankful for the lessons that I learned. And I understand how the financial markets work, and I'm still a work in progress, and I'm always learning. I do technology stuff now, and then I run SentMe, but the key is that when you understand hard money versus paper currency, you see the world through an entirely different lens. This has less to do with, oh, let me go see how rich I can get as fast as I can get rich. This is about you protecting your time and energy and understanding that hard money is not the same as paper currency. And at the end of the day, if you watch this video, remember that piece. Remember that you want to be able to take your money and be able to buy more things in the future, not less. And this information is not really taught at a broad level. Financial literacy alone isn't taught in schools. And at the end of the day, most people, when they think about investing, they try to do get rich quick things, and they only think about things that may be put in front of them that they see like on the headlines and stuff. I encourage you to do more research, to look and dig and find resources. Obviously, you can always go to www.sentme.com and explore what we have to offer in terms of our newsletter, our materials on social media, webinars and things that we offer to individuals, and some of our paid products as well, like community and courses and stuff, to understand how the system works. But you really do need to understand that the denominator matters. And no matter how hard you work, inflation and monetary debasement is always going to come for you. You have to own assets, and preferably you want to own the hardest assets that can't be printed or debased, because you want to be able to take those hard money and be able to trade that for more things in the future if you want to. So, like I said, everybody, I just wanted to get on this video and break down why the denominator matters. I think it's a very important concept, and once you can internalize it and mathematically understand how fractions really work, going back to elementary school, and understanding that no matter how big your numerator gets, your numerator can't grow as fast as the denominator. And as a result, your output is going to be debased, and it's become smaller and smaller and smaller, and you're going to have to constantly run to increase that numerator. But when you understand that 1 ounce of gold in 1971 is the same ounce of gold in 2026, it just buys you more things because gold is money. Or you think about Bitcoin, when Bitcoin was a couple $100, now one Bitcoin is what, $70,000, but it's the same one Bitcoin. Or 1 ounce of silver, it's the same ounce of silver, right? You'll understand and you'll start to internalize the idea that hard money and sound money will reign supreme in a world of paper promises. That's a fact. It's mathematical and it's inevitable, and we're seeing it right now. At the individual and the sovereign level, you can take control of your own destiny by understanding how paper currency is not saving you, but hard money is allowing you to be able to protect your time and energy. And if you remember anything, remember the denominator matters. If you also want to support the mission and support the SentMe vision, head over to our website and and buy a Denominator Matters shirt. Tell your friends and family that the denominator matters, and share this video with somebody that you think will appreciate it. But like I said, I'm going to always be making these videos, definitely digging more into long form content to break down these mathematical concepts. But I hope you guys enjoyed this video, and I look forward to coming back to share some more information with you guys soon. So take care. God bless. Peace out, everybody.